And we are rolling. All right. Hey, everybody. I just want to welcome you all here to our exclusive interview with one of the most successful minds in the financial industry, Tom Sosnoff.
I want this to be as constructive and as engaging as possible. So, I have no agenda other than, to introduce everybody to the platform and to, really to answer any questions or walk you through the steps. I think it should be pointed out that we've been building, financial technology for the last since 1999. We built thinkorswim in 1999. We built Tasty in 2017. We launched thinkorswim in 2000. We launched Tasty in 2017, building software from before that. But really, all we build is lots of different platforms, and those are only a handful of platforms. We're about to launch a brand new platform for like 20-year-olds called Bad Trader, which is a very cool platform. It's kind of like a combination of somewhere between Reddit and Twitch, and it's hosted by a bunch of college kids. I think you guys will like it. We also, we're building an exchange right now, and we have a lot of other pieces of technology, including like a crypto wallet and things like that. So we just build a ton of technology, but our primary platform is tastytrade, and it has web-based, it has mobile, it has an iPad app, but the main version that most people use, about 80% of the people that trade on Tasty, they use the software version. So I'm going to show you today is the software version. Now let me just pop this up. All right, everybody. Well, so this is, now I should give you a little background on Tasty. So our business is a little different than most other brokerages. And what I mean by that is we look at our world as we really don't care what people trade. In other words, like if you want to trade stocks, trade stocks. If you want to trade options on here. You want to trade futures, trade futures. You want to trade options on futures, trade options on futures. You want to trade digital assets, trade digital assets. We are just at our core, we are fundamentally different from other firms in that we don't have different trading levels. We don't care what strategy you use. We don't care what products you trade. We don't care how you build your portfolio. None of that matters to us. Our goal is just to, we're basically a vendor who provides opportunity in financial markets. And we're also a content creator. We're a think tank. So we build a lot of content that kind of supports, the technology that we built. Tasty is a platform that is designed to support, mathematics more than anything else. It supports quantitative finance. It supports probabilistic finance. It supports people that are looking for like a statistical or mathematical solution to different questions about finance, about trading. We take the approach, that's a little different than most. We take an approach that's not fundamental, it's not technical, it's not cyclical. It's more like there's a big message in the derivatives markets, and we kind of live in that little world. A little less than 80% of our business is listed options. So that's options on stocks, options on ETFs, options on indexes, things like that. About 10% of our business is futures. About 10% of our business is futures options. And then we're about 1% stocks and about like a 0.5% digital assets. We don't, the digital asset market's been very slow for a while. But most customers nowadays, focus on option trading because option trading has two advantages over traditional investing. One, it's incredibly capital efficient. You can trade expensive stocks using a very small amount of money. So the capital efficiency of options turns people on. And the second thing is that, option trading it's a little bit gray. It's like, it's not black and white. So you can be strategic. You can actually be right and lose money, or you can be wrong and make money. So option trading provides, capital efficiency, and it also provides a strategic opportunity. So that's what we love about it. It's just different than most other instruments. Bitcoin is very black and white. Either buy it or sell it. Stocks, the same thing. Buy it or sell it. Futures, the same thing. And Tasty supports all those products from a single interface, from a single screen. And you can trade on any one of our platforms. It doesn't make any difference. And we don't care what product you trade. And we don't care what strategy you use. And so that makes us kind of a little bit different than most other firms. And the game plan on Tasty is to get people engaged in strategic finance, but also to learn how to take risk and to learn about what are expectations in markets. A lot of people think markets are like super scary or there's lots of weird stuff going on. And the reality is markets are incredibly efficient and they're also incredibly random. Like just to give you an example, let's take a look at just a couple of stocks here. I put up SPY because it's the most actively traded underlying. It's just it's just an ETF of the S&P 500. But Alan, is there a stock you guys have been following, or a liquid stock that you guys have been following, or you like to talk about? Because I'd like to talk about something you guys want to talk about.
Yeah, a lot of us actively trade SPY, but I guess for the majority, a stock that everyone's looking at is, I guess, Nvidia. Either
Okay.
Nvidia or Apple, just two very simple, highly liquid stocks.
Well, we trade a lot of both of those stocks. Trade a lot of Apple, trade a lot of Nvidia, just a bunch of stuff like that. So I think one of the cool things about Tasty and Nvidia was a crazy stock today. I mean, at one point it was up, $14 or $15 this morning. It closed up about, four, what does it say, 450 here. It's up three. You can see it here. It's up about $3.50 after hours. This is a Tasty streams 24/7. So we never shut the platform down. But you can see right here, it's trading about three and a half. I'm sorry, $2.75 above where it closed. It closed at 459. It's trading at 461. Now it's almost $3 above. But what's neat about Tasty is that let's just say you were trading options in Nvidia, and let's say right now you wanted to go out to September for no reason. I mean, you can go to the dailies. I mean, not Nvidia. You can go to the weeklies. You can go to monthlies, whatever. I'm just showing the monthlies here on Tasty. If you want to show the monthlies and the weeklies, just go to all expirations. You can see everything here. All my current positions in Nvidia, which is pretty small because they just, my Nvidia position is actually kind of small right here, but you'll see a little dot when you have open positions, and over here you'll see the upcoming earnings dates, and the W defines weeklies, and in the middle here you'll see this is the number of days to expiration. And in the right-hand column here, this is always the same for every single stock, and whether you're doing futures options or stock options or indexes or whatever. Over here, you'll see the implied volatility, and then right next to the right of the implied volatility is you'll see the expected move for each expiration date. So if you were looking at, for example, August expiration, which is in 22 days, the expected move higher or lower is $36. And if you want to go out to September and you want to go to a normal September expiration, I'll just show you less. I'll leave this for now, actually. If you want to go to September expiration, you can see the expected move by September is $70 higher or lower. That is just a math model built as those are essentially, we dissect the Black-Scholes model and pull out the variable, the implied volatility variable, to determine an expected move number. And so the reason this is important, if you're setting a trade up in September, you want to know what the expected move is. This number will come into play about 70% of the time. That's just, that the stock will essentially touch or close outside of that number or reach that number. So this is a very interesting range. It's a 140-point range by September expiration on the stock, which is, at this point now it's 462. So, it's an expensive stock, but it has a 70-point range higher or lower. The reason that's important is you want some context. And if you were putting a trade on in Nvidia, let's say you were bullish in Nvidia, you'd want to know what a reasonable target is. And if you're bearish in Nvidia, you'd want to know what a reasonable target is. So what the marketplace does is it backs into these numbers that are the statistically the most accurate numbers in all of finance. Expected move is kind of the pot of gold. It's what people look at to determine, hey, where do you want to set up your option spread? If you wanted to do, Nvidia is an expensive stock for individual investors to buy stock in. 100 shares of stock is $46,000. So a lot of people like to do option spreads because with an option spread, like a one lot call or put naked in there would be not about $9,000, a little about $8,000 or $9,000. So if you're doing an option spread, you might want to use as little as a few $100s, and that's why people like to use option spreads. So if you're trying to set up a spread in there and you're bullish or bearish, it's really important to know what the expected move is. We also show up here at the very top we show the implied volatility rank. So you can get an idea whether implied volatility is high or implied volatility is low. And when implied volatility is super low on a relative basis, this number would be under 20. When implied volatility is high, this number would be over 30. Right now it's at 60. So NVIDIA has super high implied volatility. That's important to know because if you're a buyer of options, you don't really want to buy options when implied volatility is super high because you're probably paying a lot for those options. If you're a seller, it's probably more interesting for you. And if you're trading spreads, you'd probably want to be a seller of spreads. If you're bearish, you probably want to sell call spreads. If you're bullish, you probably want to sell put spreads. I'm not saying anything about which way NVIDIA is going. I'm just saying that using this implied volatility rank number means a lot more than looking at implied volatility over here. The only reason we use implied volatility on the right-hand side of the page is just to determine kind of what the expected move is. So if I went out to September and I opened up the screen, we don't need to see all these options. There's a lot, but let's just say we looked at 12. What's cool about Tasty is that right in the middle of the page, this just shows you where the stock is currently trading. That's all it does. Actually, let me open a few more so you can see some. Let me open 20. I'm going to need more than that in NVIDIA. There's a lot of different things in here. But so what we do is also we put a first dotted line at a 1 standard deviation move, and then we put another dotted line at a 2 standard deviation move. So if you like risk and you like statistics, we'll always show you on the platform, where the 1 and 2 standard deviations moves are, so that if you're trying to figure out, hey, you know what, I want to be inside of 2 standard deviations, that's kind of a very cool thing. Also, when we talk about, when I talk about like a 70, when I talk about a $70 expected move, so the stock, let's say, closed at 460. When you're talking about a $70 expected move by September, what you want to know is kind of where are those ranges? So on the downside, it would be about, let's call it 390, okay? And on the upside, it would be, if we're trading at 460 and we're talking about, or 462, but it doesn't matter, it's close enough, we'd be somewhere around 530, right? So what's interesting here is if I went up $70, it takes me to a 530 calls, which are 1460. If I go down $70, it takes me to the 390 puts, which are 940. So the first thing you see is that there's a lot of call skew in here. Call skew or put skew is just when options are equidistant away, and yet the calls are more expensive than the puts. The marketplace recognizes that there is what we call velocity of risk to the upside. And so it doesn't mean the stock's going higher. It just means the market perceives the risk to be to the upside. And the strange thing about option trading is that, it's not, the market never knows which way it's going. Markets are random. The markets never know which way the stock's going. This market has no idea if NVIDIA is going higher or lower. But what the market knows is that the perception of risk is to the upside. Well, how does that help you? Well, it doesn't help you in knowing which way the market goes, but it might help you in setting up a spread. So for example, if you wanted to sell some, let me just get rid of this. Actually, I'll leave this here for a second. If you wanted to sell some upside premium, let's say you wanted to do something relatively cheap because you were bearish in NVIDIA. So you wanted to sell a call spread. Well, the one thing about knowing that there's upside skew is you can probably move this call spread a bunch of different strikes higher. So you can give yourself more room and collect about the same amount of money. Let me get rid of this put spread for a second. This put. Okay. So the other nice thing about Tasty is we don't make you click on anything other than the strikes you want to trade. So the cool thing about Tasty is, like, I just clicked on the 550 calls to sell them and the 555 calls to buy them, which is a short call spread, obviously. It's a short credit spread. It picks up, it's $5 wide, it picks up 92 cents. That's going to have a relatively high probability of profit, well over 80%. Well, look down here. It's, I shouldn't say well over, just over 80%. So we actually show your pop, which is probability of profit, right down here. So you don't even have to go to a different screen. So it has an 82% probability of profit. P50 we show is a Monte Carlo simulation that shows the statistical chance of making 50% of max profit. So 50% of max profit this trade is $46. Let's say you did a one lot. Let me just change this quantity to one contract. So there's an 82% chance of making at least 1 penny at expiration. There's an 87% chance of making 46 cents. I know that seems crazy because you're thinking, how could there be an 82% chance of making 1 penny and a 87% chance of making 46 cents? Well, because this means you can get that number anytime between now and 50 days from now. And then it shows the delta on this trade. So this trade, for most people, like, well, I don't really like selling call spreads in NVIDIA. Well, this is the theoretical equivalent of 1 share of NVIDIA, 1.27 shares, or 1 share of NVIDIA. That's all. And then we weight it to the SPY, the next column over, which is we beta weight everything on Tasty to SPY. So what we do essentially is we say, hey, if we converted these to SPY shares, what would it equal? So we show you everything in apples to apples context. That's a SPY share. Then we show you the total credit you receive. In this case, I'm sorry. This one is CVAR. So CVAR is conditional value at risk. And conditional value at risk simply means in the worst 5% of all cases, like, what is my expected loss? And in this case, because it's a defined risk trade, we put the whole number up there, $408. A max profit, $92, max loss, $408, and then the buying power reduction of the trade. So what's fascinating about this is you never have to leave this page. And the cool thing about Tasty is if you're like, hey, I want to take more risk than that, well, then move the calls you're buying up 1 strike and basically collect another 60 cents. Or if you want to take more risk, move the calls you're selling down a strike. Okay? You don't have to do anything other than that on this platform. You don't have to click in anything. You don't have to type in anything. You don't have to do anything. You want to do more contracts? Just click from 1 to 2. You want to go to a different expiration? Just click on positive or negative here. And if I want to go back to 1, whatever it is you want to do. And if you say, okay, this is kind of cool, but I want to add, like, let's say, I want to add a short put to this because I have some capital and I want to do, we call this trade, by the way, Jade Lizard. I want to add some capital. Well, you can sell an out of the money put. No problem. We don't care what you do. So you can add an out of the money put to this. But say, well, I don't want to add an out of the money put to this because it's going to pop up the amount of capital required in this trade. So I'm going to add an out of the money put spread to this. Now you have an iron condor. And this iron condor, as you can see, this is $10 wide. This is $5 wide. So it's a little bit unbalanced. So if you want to balance it, you just drag it out. If you want to leave it unbalanced, we don't care. If you want to do 2 of these and 1 call spread, we don't care. You can do all that stuff. So the cool thing about Tasty is we don't care what you do. We don't care how you set up your trades. If you want to do an iron condor, what happens now, because again, the market go either direction. So your 82% probability of profit, let me just go back to this for a second, keep it $5 wide. Your 82% probability of profit drops down to 60. See, it drops way off. Your pop goes down to 72, but your credit doubles almost. Okay, your delta flattens out, of course, and your CVAR goes lower because you have taken in a higher credit. You have a higher max profit, and you have a lower max loss, but you can lose both ways. That's why your pop dropped. And the cool thing about Tasty is if you're like, okay, that's kind of cool, but you know what? Show it to me in a different view. You can look at it in a curve mode, and let me just... Okay, so you can look at it in a curve mode, so you can see it in a visual mode if you want to. If you wanted to see a chart of NVIDIA, it's right here. If you wanted to see your NVIDIA position, it would be right over here. If you wanted to see all your NVIDIA activity, it would be right here. If you wanted to see a quotes, anything what the market's doing, and it's trading live right now, it would be right over here. You never have to go to a different page on this platform to see anything. If you want to see chart of NVIDIA, you just go here. Okay, I mean, everything is right in front of you. And that's the coolest thing about the platform. Everything, you never get lost. It's not possible to get lost in the platform. Your positions are right up here, all our different functionalities here, all our other functionalities right in these columns. It's very compact. I'm showing this to you on like a 12-inch laptop, so it's real clean. If you want to take more risk, roll it up. Roll the strikes up, get them tighter. You take a bigger credit, you take significantly more risk, but you make more money if you're right. And if the stock just sits here, who knows? And you can do the same thing with any single underlying, using any month, using any strikes. And again, we are completely indifferent. If you wanted to buy the stock, you just click on the offer. If you want to buy stock in addition to this, let me show you this. Close this up. Let's just say you wanted to buy stock. We don't care how many shares of stock you buy. If you want to buy stock, just click on the offer. You want to sell stock, just click on the bid. And stock's free on this platform. We don't even charge for it. Click on the offer to buy, click on the bid to sell. If you wanted to trade something that's trading tonight, I mean, let's just say, because the market's open all the time. So just as an example, let's say we go to the micro, because just to keep things simple, we'll go to the micro E-minis. And the market right now is 75 bid at even. Click on the bid to sell it. That's a micro E-mini. And let's just sell it. See, everything else on this platform, just so you know, this is a high frequency platform, meaning the middleware part of the platform is all high frequency. So you can see right here, I just sold that micro at 75, and it's now the offer. If I wanted to buy, oops, no, can't buy it back there. If I wanted to buy it back, 75, I just click there. And it's, oh, there I am filled. So I just scratched the trade. But point is, whether you're trading futures or you're trading NVIDIA, everything is right dead smack in front of you. I mean, this is the only markets that are open right now are the futures markets. That's why I'm trading it. But you can trade futures, you can trade futures options, and you can also trade, digital assets. So like, for example, if you were, for some reason tonight, you had, a bug and you wanted to trade crypto, you can come over here, and you can buy as little or as much as you want. But if I wanted to buy some Bitcoin right now, I just click, and I just bought $100 worth of Bitcoin. And I can buy ETH, I can buy other, we're limiting the cryptos right now. We had 27, we're limiting it, knocking it down to 5 just for regulatory reasons. But hopefully the regulators will come to their senses and we can push out everything we used to have on here. And again, on the platform, I just traded crypto, futures, and I can't trade options now because they're not open. But everything trades from the same interface right in front of you, and it is. And again, there's so much functionality here. I mean, I can't even begin to get started on. There's a million lines of code in here that do everything from track your trades to do analytics, to do our digital networks on here. There's multiple charting platforms on here. There's just a crazy amount of technology built in here, but it's all geared to you trading. And of course, there's other things as well. There's news, and there's, like I mentioned, there's news, there's analytics, there's fundamental stuff. The list goes on. Every single one of these icons offers a different, feature throughout the platform, and every single one of these icons offer a different a different icon, which leads to something else. But everything pops up on the same interface, so it all stays in front of you all the time. Now, I just spoke for a bunch of minutes here, probably longer than you wanted me to, Alan. So let's answer some questions if people have something, just because I don't want to get into too technical a discussion, if that's not what people are looking for.
You want to talk a little bit about the cryptocurrency that you offer, the crypto trading? Just some of the upsides and, the pros of trading crypto on a platform like Tasty versus, just using it for, just crypto storage on a platform like Coinbase.
Well, the difference is that Coinbase is a pure crypto platform, so they offer more choices with respect to crypto. We're a regulated BD, so we had 27 different digital assets on the platform, and we had to cut it down because the regulators are debating whether or not the cryptocurrencies are a security or they're not a security, and it's a brutal regulatory environment. The SEC has completely effed up crypto, and it's very unfortunate. The good news is we're going to get some regulatory clarity down the line. There's no difference between trading, crypto on Tasty or trading crypto on, any other platform. The only difference with us is that we try to have a commission schedule because we have a cap. So it's way cheaper to trade crypto on Tasty than it is on any other platform because we don't make any money on it. That's pretty much the reason. But we try to maintain super tight markets. The problem with crypto is that you don't really trade crypto because you can't go short it. It has no derivatives market. So it's really just a one-trick pony. If you want to buy some Bitcoin, great. If you want to buy some ETH, great. You can sell it if it goes higher. You can sell it if it goes lower, take a loss. But there's no real trading anymore because there's no options. There are futures, but there's no real options on cash crypto, and you can't short it. So, we live in a kind of a weird regulatory purgatory right now, a regulatory world that is very unclear. Most of these firms like Tasty, we're sitting back waiting to see how much the SEC is going to fine us for even offering crypto, and we don't make any money in the space. So the good thing about what we offer is that it's incredibly safe. I mean, we don't have the fraud risk that any of these overseas companies have. We're not the counterparty. We just fill them and bill them type thing. We go through a company called Zero Hash to execute all our crypto, and we are the second largest shareholder of Zero Hash. So we go through a very friendly company for Tasty, and we use market makers all over the world. So we're not tied to anything. We go out and search the most competitive marketplaces, but like I said, it's really for people that want to build assets. We have launched a Tasty Crypto, which is a wallet. It's our brand new wallet, and pretty soon you'll be able to transfer in and out. So the cool thing about the new Tasty wallet is it's going to offer a lot of functionality, like different kinds of decentralized exchanges and places where you can do various kinds of crypto swaps. But it's also going to let you transfer money in and out of Tasty via digital assets. So we'll be one of only, I think it's only going to be Tasty and Robinhood that actually offer that. I'm not sure if they do yet or not. So we do have a little more digital asset functionality than anybody else. And you get to use it right on our software. So that's kind of cool. But the space is, it's dried up a little bit. Most people, aren't aggressively trading crypto like they were because, just because nobody knows what's going to happen in the space over time. I think eventually the SEC will come to their senses, and eventually they'll decide how they're going to regulate it. And hopefully, we'll expand our offering again, because we're very bullish on portfolios that are diversified, and crypto is a really strong portfolio diversification because it has zero correlation to stocks. So with zero correlation to stocks and a relatively high implied volatility, crypto has what we call asymmetric upside. And so we actually I like crypto a lot. We're invested in a bunch of crypto, but it's just quiet right now. That's all.
That makes a lot of sense, honestly.
Yeah, no, listen, we've invested a lot of money into digital wallets, we built a matching engine on the digital side. Like I said, we've invested a lot of money in Zero Hash. We feel really good about, our attempts to gain, at least some leverage and a piece of the pie in the space, but it's challenging right now. That's all. We're bullish on it long term. Short term, it is what it is.
Tom, quick question about crypto, actually. When you say you guys are bullish on crypto, are you bullish on the technology itself, or are you bullish on the price of say Bitcoin increasing? If you get that.
I'm bullish on the technology itself. I think crypto is a technology play. I don't think it's anything else. I mean, I think the technology has the potential to disrupt, part of the whole international banking and the transfer of assets. It's very archaic. Legacy international banks are pathetic, and they charge an incredible amount of money for people all over the world to move money around. Crypto is an instant response to that at a fraction of the cost. So I think crypto has a big part, in the future of technology. I'm also a big fan of, blockchain technology, because I believe that digital assets, including, digital collectibles and lots of different things that will ultimately be stored on a blockchain, I can't imagine that's ever going to go anywhere but up. I think within 3 or 4 years, 80% of people will have a digital wallet. And from that digital wallet, you'll be able to do things that, you haven't even thought about yet. So I think the technology is here to stay. I'm bullish on the technology. I hope the various blockchains get off their asses and start to, support, they can't right now. Most of the blockchains have taken a step back and put their hands up and said, we're not sure what's going on regulatory wise. And they put the fight on brokerage firms like us and Coinbase and Robinhood and different firms like that to fight with the SEC for their product. And I think that's not fair. I think they need to step up and join the fight and explain, how this technology potentially is a game changer. Much the way like kind of AI did. AI did a great job with, with PR and promoting their space. Crypto did a crappy job. And all the fraud, like FTX and Binance and Mt. Gox and all the, and Gemini and everybody else, they didn't do us any favors. So a lot of scammers out there did not do us any favors. But the reality is that the underlying, technology is super cool. A little interesting story, we did the first interview ever on Tasty with the founder of ETH, Vitalik. And he came on our show much like this. We were doing an interview with him. He was living in his mom's basement. He was 17 years old, and ETH was it was about 18 cents or something. And he came on the show, and Tony and I interviewed him, and we were kind of just chuckling in the background, like, who the hell would ever spend 18 cents for this coin that this kid just developed? And he was on a headphone. He was really nervous, and we just look back at that interview. We go, oh my God, we were there. We just, we didn't believe him. We didn't really understand it. We were so naive. We were so dumb, and we just look back at the whole that I think it was 2013 or 2014, and we just kind of shake our heads. So I think that we've been in the space for almost 10 years now. We believe in it, and I believe it's a technology play.
Percent agree. Especially, I've been following the ISO like 20022, whatever it's called. I think 100% you're correct that it's technology play. I don't know how the price of it will go, but I 100% believe in the technology. So I agree with pretty much everything you just said.
Yeah, well, the price is stabilized here, and it's interesting because the volume has dried up, and usually when volume dries up, price does not stabilize this strong. But the price is stabilized because there are no sellers. So I think, generally speaking right now, we're in a pretty, I think digital assets are in a pretty good spot. And I think, again, every time they get cheap, I think there's, again, this is another asymmetric upside. I think the downside is maybe, I don't know, $15,000 or $20,000 on Bitcoin, and maybe, $1,100, $1,200, $1,300 on ETH. And the upside is, is truly unlimited. So I'm not a seller, that's for sure.
So, Tom, this might be a little bit off topic for everything we're saying right now, but if you don't mind me asking, what is your largest crypto holding?
My largest crypto holding is, right now, my largest crypto holding is, it's about equal. So it's, you're going to hate this answer because you're going to think it's a cop-out, but it's really not. I have about equal holding in Bitcoin, ETH, Polkadot, Cardano, and Solana. I have about the same amount of money in each one of those, and I've been holding those for a long time. I probably, and I don't have a reason. I interviewed Charles Hoskinson from the founder of Cardano, and he's a freaking brilliant guy, absolutely off the charts, crazy brilliant. But I'm down money overall on Solana and Cardano. I'm about even to up a little in Polkadot, and I'm up good money in Bitcoin and ETH.
Have you been following up with what's been happening with Ripple recently?
I have been, but we weren't able to support Ripple. No retail firm was, because of all the back and forth with the litigation. But I've been a big supporter of, I'm glad they had the money to fight the SEC and to really go at it, because they are the one blockchain that, if we're able to support them, I will buy Ripple, because just because they got balls. They've done stuff going after SEC, fighting them. I know they spent $100 million or something more than that, but congratulations to them. They stepped up, and so I would be a supporter of that blockchain. We didn't support it. Zero Hash does, but we didn't support it. So I never had a way to really buy Ripple, but I will in the future. We will support it next time around.
Awesome. I don't want to take the convo away from this, from all the crypto stuff, but I did have an options question, and I think a lot of people in the community would benefit from. Tom, obviously, the zero DT options
Sure.
have been, super popular lately. And I loved how you were talking about expected move earlier. And I was just curious what your thoughts would be for the best way for retail traders to trade zero DT options, SPY or SPX. One, would it be buying or selling? And then two, like how would you use the Tasty platform to, help decide how to pick your strikes and stuff like that?
Okay. So the best way to use zero DT options is to stay small because they are, just because there's a lot of risk and very little edge. There's no negative edge, but there's no positive edge either. So let's see. Can you see the platform right now?
Oh, we cannot,
No.
Tom.
Yeah, hold on. Let's go back. Let's try this. Did it come back up?
Yes, sir.
Perfect. So there are a lot of different products out there, and obviously the one that's most active with zeros is the SPX. And when you look at SPX options, like these are all the different zeros, ones, that kind of thing. So when you look at this is probably the most active of them. I mean, a lot of people trade SPY, and I'm fine with SPY, except the only difference in SPY is that you have to make sure you close your position if you're around at the money strike, because you don't want to be assigned or any of that kind of stuff. You don't want to be open-ended. But if you're using a cash settled index, and I don't care whether you use, SPX or XSP, or if you want to use SPY or Qs, whatever it is, zero, it doesn't matter to me. But strategically, I think with zero DTs, there's a couple things that are important. One, you need to stay super small. So whatever your size is, cut it down. Especially if you're doing SPX, there's a lot of risk in there. Just cut down your size. Number two, if you're doing like, let's say you wanted to do, tomorrow, which would have been the one day. Let's open up the one day here. So one of the things that we do is we would look at what the one day expected move here is. So you can see it right here. It's $26 because volatility spiked today a little bit. So it's actually high. So it's 26.63. So there's high implied volatility leads to a higher expected move. Expected move is just implied volatility. So the difference here is that it's $26 expected move. So to answer your question, we would set something up a little outside of $26 if we were doing something. So for example, let's say I wanted to do, are you bullish, bearish, or neutral?
Well, it depends. Or are you talking about setting up a short option strategy or a long option strategy
In this
for
case,
one?
I'm going to do a long option strategy because I'm going to have I want to use the least amount of capital.
Gotcha.
So are you bullish, bearish, or neutral?
Let's just go bullish and follow the trend. Well, today it broke,
Okay,
but
fine.
it'll go
Let's
bullish.
go bullish. Let's go bullish. I mean, they're up a little bit tonight, but let's go bullish. And so this index closed at 45.37. That's where this line is right here. So if we were bullish on a $26 expected move, I'm going to put my short strike about $10 higher. Okay. And then I'm going to put my long strike about $30 above this. I'm going to put my short strike about $30 below this. And I'm going to increase this size. Hang on one second. I'm just going to put this in, make this super simple for you. So this is a one lot call butterfly that's $10 above the market for tomorrow. So that would be, in this case, it would be about 0.2% move. It would be the S&Ps being up kind of where they are, in after hours trading right now. You could move it up obviously more if you think we're going to be up, but this is the expanse of this covers $30 lower and $30 higher, and we're starting $10 higher than where we closed. If you were really bullish, you want to do it $20 higher, we'll just move this up to, where am I? To 85 right here. So 55.85 is $30 wide, and on the downside 55.25 is $30 wide. This spread trades for just so. And again, the spiders would be exactly 1/10 of this. So if you did this trade in the spiders, you'd be risking $100 to make $200. If you're doing this in the SPX, you're risking $1,000 to make $2,000 if you hit it perfectly. But This has a decent risk reward in the 1 day because you're just betting that we're going to stay inside the expected move. But this is how we essentially trade the 1 day expected move. The difference for us is that we don't let it go to the end of the day. Most of the time, we will manage this trade before noon. So we have this kind of rule with zero DTs. We don't hold them to the close. We usually manage them before 1, and ideally we'd like to manage them by noon. Our research shows that if you manage early, your success rate goes up. There's about 50 times more risk in the last 2 hours than there are in the first 2 hours. So our preference is to put something on that will, that we can take off whatever within 1, 2, 3 hours. That's really the game plan. 4 hours at max. But we like doing kind of either at the money or just slightly out of the money to the upside if we're bullish, to the downside if we're bearish. Butterflies on the call or put side. Doesn't matter which. This is cash settled. Either one's the calls or puts are the exact same. But this is a classic example of how we would route a trade. So if I was bullish on this and I wanted to put this in for, let's just say tomorrow, I just hit review and send twice and it pops up right here. And now it's a working order for tomorrow. Now it's a 1 DT. Tomorrow it'll be 0 DT. But that's how we do the trade. And the nice thing about Tasty is, you can set your trades up in here. You can route them. And if you change your mind, you just right click. And if you want to replace the trade and change the price or cancel the trade, just click on it. Boom, it's gone. That's HFT technology, right in front of you.
I like it. So instead of, just buying or selling naked options, you're playing the define risk butterfly.
Yeah, well, of course, because the problem with naked options in the SPX is it's a $4,500 index, which means, if you're going to do one naked option here, it's about $80,000. So naked options for most people are not, do not fit into their portfolio size. I mean, a naked put and a naked call is about between $75,000 and $80,000. For the pair, for just one, it doesn't matter. And if you're doing it in the SPY, it's 1/10 of that. So it's whatever, $7,500, $8,000. But if you do it as a spread, like that spread I just showed you was $100 in the SPY or was $1,000 in the SPX. So this is about capital efficiency, and that's all. That's the reason we would do defined risk. That's it.
Yeah, it makes complete sense. Another options question I actually had as well is, I was just curious about your opinions on futures options, because I personally trade, because the capital efficiency on futures options with span margin is amazing compared to anything. It's almost like portfolio margin.
It is. It is exactly like portfolio margin, just so you know. Yeah.
Right. Yeah. So it's amazing. So that's why I like to sell options in there. But sure. I noticed the liquidity isn't great. I just wanted to hear your input.
It depends where you're trading. So what future or commodity are you talking about?
The MES. Yeah.
So when it comes down to the micro options, they're very marginal. The MES is the only one you can actually trade. The other ones are, very suspect as far as the micros. I mean, all of the minis for the major, the major underlyings, like I have them listed here, but the S&Ps, NASDAQ, the VIX, bonds, crude. These are bonds, crude oil, wheat, 10 years, silver. These are all all the options are relatively liquid, meaning price discovery is 1 penny around mid-price. But when you get to the MES options, actually we do offer MES options, but nothing is, let's see. Oh, they're there. Okay. When you get to the MES options, I mean, it really just depends on, if we went to kind of like a classic August expiration, these markets aren't bad in the MES. All the other ones are horrible at night. During the day, but during the day, these MES options will get to be about, they're literally be about 1 or 2 ticks wide in MES, but the NASDAQ could be as much as $3 or $4 wide. But at night, they get a little sketchy. So like right now, they're too wide to trade. But if you wanted to, like for example, let's say I wanted to sell a 18 delta call. So I go up to the 4670s, click on the bid. Oops, let me just clear this. Click on the 1870, what'd I say? let's just see which one I had. Yeah. So if I want to click on the 4670s, just click on the bid, same way you'd set up any other trade. Then I would just adjust price. The market's 10 to 1150. So it probably trades around 1075, just to give you an example. So I'll go in at $11. Hopefully there's an uptick and I'll route it. So here it's resting right now. So I went in like one tick above mid price. So if I lower it, I'm guessing pretty close to getting filled right here. Nothing done yet. We'll see.
Yeah.
Okay, so that's
no
my
worries.
offer.
Yeah.
But just to show you how easy it is to trade it on the platform. But yeah, you're right. These are very capital efficient. They're about 6 times more capital efficient than S&P options or spider options.
Oh yeah.
About 6x.
Yep, 100%. And we do have someone in the chat asking if we can demo a bracket order setup trading MES, the futures contract, not the options.
I can, but I can't pull it up on this. You know what? If you just write to our support team, they'll send you the instructions for it. If I pull it up here, it's going to pull up a separate window, which you're not going to see.
Okay, no problem.
Yeah,
maybe.
But we could do it. They could do it separately for you anytime you want.
Gotcha.
We have a lot of things that pop up as separate, not really a lot of things, but some things that pop up as separate windows, the bracket orders, and also you end up with, like, we have a pairs trading, interface, that kind of stuff. So there's just a couple things that you can't, when you have a share mode, it won't pop up.
And then we do have RS Sailor asking how the fills on ES options are. He said on TOS they're a little bit wonky. We did just go over MES, but
yeah, so they're the same at every firm because it's an electronic book, so there's no brokers involved. So the fills on futures and futures options are no different whether you're connected to Globex directly at the CME or you're working through any broker in the world. Every single fill is the same because the technology, the only difference between TOS and Tasty fill-wise is that Tasty is about 10 times faster than TOS because it's newer technology and it's all high frequency middleware. But the actual fill from the CME is going to be the exact same because there is no middleman. It's just an electronic book. There's no market maker. I'm sorry. There's no high frequency market makers. There's no payment for it. It's just pure straight to the exchange. So it's an electronic book. There's no preference. You just sit and wait your turn just like everybody else.
Of the sound of that, 10 times faster than TOS too, so that could definitely be probably the cause as well then.
It could be if two people are routing order at the exact same time.
Sure.
But generally, listen, to be fair, 10 times faster just means that we don't have as many stops, but you're still talking about like the difference between 50 milliseconds and 500 milliseconds. It's, like the blink of an eye.
Right. Well, all makes a difference. Let's see. Any other questions? Said thank you. Cool.
Cool. So if anybody else has any questions for Tom, please feel free to throw it up in any of the chats. We are monitoring them right now.
There's one.
Yep, we just had another guy named Tom. His name is Tom Travel. Ask a question about what is your favorite options trading strategy, spread, directional, etc.
So I tend to be, more than anything else, I tend to sell, a lot of strangles. And let's take a look at something I don't currently have a position. I don't think I have an IWM position. Let's see this. I do not. So my preference is generally, I prefer to sell strangles more than anything else. I'm indifferent to underlying product. I basically look for something with high implied volatility. This doesn't have it. So, but this is an example. My preference is to take the expected move, which in IWM, which is the Russell 2000 in September, is exactly $10. So I'll open up September options, and we currently closed at 194. So I would go to the 185 calls on the sell side and the 204 calls and the 190 and the 184 puts. And I'd be a strangle seller. I mean, if you want my go-to strategy, I'm a strangle seller. I'm a premium seller. I like high implied volatility, and that's really where I live.
Gotcha. So pretty much just neutral then.
Well, no.
Like
I
it.
mean, I'm usually opinionated. So if I'm a little bit opinionated, maybe I move the calls down a little bit if I'm bearish. And if I'm
Gotcha.
bullish, maybe I move the puts up a little bit if I'm bearish. That's all.
Yeah. That makes a lot of sense.
Yep.
So Asher, our quant, has a question. I don't know if you are able to answer this, Tom. But Asher asks, what is your macro outlook for this year? Are you bullish or bearish on the overall market? If you're expecting a recession, when do you think that is coming?
Well, I'm not expecting a recession. I have never been expecting a recession because during my entire career, every time I expect a recession, there's never a recession. So, no, I never, ever play for a recession. I never play for anything macro because I think it's too damn hard. But if you want my outlook for the rest of the year, I don't know what it's worth, but I'm happy to throw it out there. I think the NASDAQ is going to have a really hard time making anything close to double-digit returns for the second half of the year. In fact, if anything, I like the downside in the NASDAQ much more than I like the upside in the short term, in the medium term, and in the long term. I think that in the world of just looking at the rest of the market, I think the small caps have a lot of upside, and I think the S&Ps, they got a little frothy, and I don't think they're going anywhere. I think if anything, I'm more scared of the downside, but so far there's been zero pressure on, there's been absolutely zero pressure on this market to sell off. I mean, today was the first day we've seen a decent, turnaround midday. So anyway, so my macro look is I think the market ends the year maybe a little bit lower than where we are right now, but I don't think it's going to do much of anything. I think the real risk is in the NASDAQ for the second half of the year. I think the S&Ps are going to be pretty flat, and I think the Russell potentially has some upside. My biggest plays right now are two different pairs trades. I'm playing the steepener in the yield curve. I'm long the twos and short the tens. I think that thing is at historic lows right now, and the yield curve is as flat as we've ever seen it. And I can't imagine that into perpetuity you're going to see 10-year yields, 100 basis points under, 2-year yields. So I love the yield curve trade as kind of the trade of the year. And I also like Russell versus NASDAQ. I am long Russell, short NASDAQ, and I have that trade on pretty decent size. And I plan to keep that on for some time here. But I'm doing it on a ratio of 5-2, long 5 Russell futures, short 2 NASDAQ futures, and that's my ratio, and I'm keeping that trade on, pretty significant size.
Very cool, Tom. A question about the yield curve trade. What do you think for like smaller accounts would be the best way to trade that if they don't really want to trade futures?
There is no way to trade the yield curve without trading futures, unfortunately. The equity marketplace for really low vol and, the equity ETF marketplace for really low vol instruments like bonds and like 2 years and 10 years just doesn't exist because you need leverage to trade those. But there are some micro products. There's something called a 2YY, which is a yield product by the CME, and then there's the 10Y, and those are 1/10 the size of notes and bonds, and those are a 1-to-1 trade. So if you want the yield curve and you want it on really small size, you can use the micro products. Their 10YY, which is the 2-year yield, so you would be shorting that, and the 10YY, which is the 10-year yield, so you'd be buying that, and that's that's where I think that trade goes off at 1-to-1, and it's relatively cheap to do. Here, I'll show you really fast. So if you did the /2YY, this is the 2-year. Now it's different than using the actual bond products because this is the actual yield, but I think this yield comes down. So you can see, I mean, it's not trading tonight, but you can see this during the day. But if you do like, let's just say one of these contracts, the capital is only $407. And then if you do the /10Y, it's a cheaper way to trade the yield curve. /10Y, you can see it's only $3.99 trading. So this is the one you want to buy, and this one it's $352. So basically, you're talking about $750 to trade the yield curve, which is relatively small in this micro case. And I think there could be anywhere from, it's a bond return, it's really low volatility, but I think this could be somewhere in the neighborhood of, in a good second half of the year, this could be something in a 20 to 35% return on capital. So I like it.
Very cool. We had another question from Ross. He says, where do you see the brokerage industry going in terms of development? He said, for 2010s, the race to zero was the big move. We've more recently seen the addition of crypto and 24/5 equity trading and securities. And he's asking if 24/5 equity trading is the future.
24/5 equity trading, I doubt it. I just don't think I don't think there's enough interest from the market makers. I don't think that 24/5, is that realistic on a short-term basis. There's just too many underlyings. It's hard to maintain that kind of, around the clock liquidity in the derivative space and in the, and in the equity space. I mean, there's obviously some stocks that trade, they can make markets in, but they have to be the most liquid ones like SPY or Qs. I think the market for self-directed investing and speculative, strategic investing is going to explode. I mean, obviously I'm biased. I'm talking my book, things like that. But I think we've just scratched the surface. Like, I think what you guys are doing and what this whole, the idea for people to take, especially young people, to learn how to take risks, to learn how to speculate, like I would never be where we are today, building these kind of companies if we didn't learn to take risk at a really early age and just say, screw it, we're just taking risk on every chance we get. And I think that it's such an important part of, decision making, brain processing speed, risk taking, probabilistic outcomes, and it's the most efficient marketplace in the world. So is it hard to make money? Sure. But is it efficient? Yes. But do you learn so much from it? And can you start to articulate things in finance that most people can't? The simple answer is, yeah, you for sure can.
Yeah, I love that. That's pretty much exactly, what we're doing here. We're live in a voice called trading with each other every day, and everyone's just getting smarter together. It's amazing.
Yeah, no, listen, what you guys are doing is awesome. And obviously, I want to be supportive. When I first met Alan, I'm like, when I first met all you guys and you came up to Tasty, I'm like, listen, whatever you want to do, I'm supportive.
I really do appreciate you taking the time out of your day to just come here and speak to us, Tom. Like, it really does mean a lot, not only to me, but to the whole community. The fact that, you're coming out here, showing your support, and just doing what you can do to help out all the other traders in the market, because I'm sure you know this as well as I do. And there's some guys in finance that just, I would absolutely hate just sitting down and talking with, but it just, like, speaking with you, man, it has been some of the best experiences I've had in a long time speaking to guys in the financial markets.
Well, I appreciate that. And hopefully, listen, we could do this into perpetuity. So there's groups I've been talking to now for, the last 13 years. We're still doing it, so just, I'm going to sign off now so I can do some other stuff tonight, but you can reach out to me anytime, and you can bring this, you can bring your whole crew, and we'll talk anytime you want. These kind of things, I love doing these. So talking about markets and just, kind of shooting the shit about everything. It's the most fun I have. So just give me a holler anytime, and happy to support you guys and your entire community any way we can.
We appreciate that, Tom. Thank you again for coming out here and speaking to the whole Discord.
Awesome. I really appreciate you, Tom.
Thanks, guys.
Thanks, you.
Guys. Have a great night. Talk soon.
You too. Yep.
Thanks, everybody. Bye.